Ross, thanks for joining us.
Thanks, Peter.
Now, Ross, industrial property, it's been on a bit of a boom. How good is the current boom?
The current boom is pretty strong, Peter. What we're seeing is, at a global context, fund managers all around the world looking to grow their exposure to the industrial asset class, and they're really doing that because of the current boom in e-commerce. Looking around at groups like Amazon and Alibaba outside of Australia, they've really driven a huge amount of demand for logistics warehousing, and we're starting to see that trickle through to Australia, where we're still at a very low penetration point for these groups, and seeing the weight of capital that's going in globally, that's coming into Australia in a strong way.
Yeah. Now, I love the ratio. Explain it to us that when you lose a square metre of retail,
Yes.
Pick up on that.
So yeah, the traditional thinking is, for every square metre of retail footprint that reduces because someone may be shopping online, it requires 3 square metres of warehousing footprint. So it's a direct correlation between what might be perceived to be a negative sentiment in the retail market at the moment for retail real estate, translating into needing more floor space in the warehouse part of the market. And that's what we're seeing is warehousing really become the substitution for retail space in the current market.
Okay. So I noticed in your notes you're saying that the M7 led to a certain kind of implication for industrial property. What is the infrastructure that's going to come after the M7 going to do for industrial property?
So look, we're probably seeing a couple of things happen historically in the market and currently in the market. And in the report we've just published, we've talked about where infrastructure is going over the next 3 to 5 years and how we think that's going to keep really stimulating demand in the industrial sector, particularly in New South Wales and Victoria. What happened about 10 years ago in New South Wales was the M7 motorway came online. And that was very important from a logistical point of view because it connected the M5 motorway, which ran to the south of Sydney, to the M2 motorway running to the north of Sydney, and created a strong infrastructure connection to round out the Sydney orbital network at the time. But what that did was bring on vast tracts of greenfield land in outer Western Sydney markets like Eastern Creek and Erskine Park, future Badgerys Creek when that comes online. So really what that led to was great for our tenants, the transport users. They had much more efficiency in their supply chain, but it created supply in land, and that's going to put pressure on rentals. So we saw about 7 to 8 years of stagnant rental growth whilst the market was absorbing that land. The current infrastructure boom we have going on at the moment in New South Wales in particular, where we see that as very different is the prior piece of infrastructure released greenfield land. At the moment we're actually seeing the geographic boundaries of Sydney coming into play, and the space that's inside the orbital network being a space that's becoming very, very sought after. So if you think about what's happening at the moment, WestConnex, it's inside that Sydney orbital network. The Sydney Metro is inside that orbital network. The future Badgerys Creek Airport, it's on the outskirts of it. And more from the private sector, Qube building their inland port down at Moorebank, the Moorebank Intermodal Terminal, is again in that node. So you're seeing huge amounts of infrastructure coming into the population centre, not bringing on vast tracts of greenfield land. And we think that's going to create a pretty strong environment over the next few years.
Yeah, so the effect then is, because of e-commerce on one hand, there's great demand for industrial warehousing space, and the Goodman Group as a company has benefited from that.
Absolutely.
But you think, looking at one of the charts in one of your notes, basically when I look at that, it's like, well, you had a boom, but we ain't seen nothing yet. You think it's going to be a really big boom? Yeah,
look, we expect it to be, particularly in Sydney and Melbourne, where we're seeing geographic constraints coming into play.
That's the point you made earlier.
That's right, and strong population growth. So Melbourne's actually having very strong population growth at the moment. Good migration, good. Probably got one of the highest population growths forecast in the developed world. So we should see that coming in, and then what we're going to see is really our impatience as consumers driving the demand for well-located property. So whilst you might be able to create new warehousing on the outskirts of the city, if that warehousing is not capable of delivering to you as the consumer in 1 hour, 2 hours, then that's not going to be relevant to those customers. So back to the point of the land inside the orbital network being much better service from infrastructure point of view. It's servicing population as well. For the properties that are located inside of that, you can't manufacture more of it. You've only got what you've got.
Yep.
Look in Sydney today, there's no greenfield land inside that ring, and that's where we think there's a pretty strong environment to come.
So for those people watching this who aren't quite sure, how do you guys define industrial?
We're purists, I guess. So we look at logistics and warehousing effectively. So properties that can accommodate warehouse tenants and manufacturing tenants is how we see it.
Yeah. So it's like the old factory plus
Yep.
warehousing.
Correct.
Okay.
Yep.
And so Centuria really thinks this sector that's done well anyway is even going to do better. Until when?
It's a pretty good question.
Yeah, and be right, by the way, Ross.
Yeah. Is there a disclaimer? No, look, I think the key point we're seeing is where does it run till? At the moment, it's pretty hard to predict that point. Yields are at a point where yields being capitalisation rates, they've been contracting lower and lower because the demand keeps increasing for the asset class. We don't see that turning around at a point in time soon, particularly when you look at the weight of capital coming in from investors that might be saying, I don't want to invest in the retail asset class in the current environment. Where do I want to invest? So that's pushing a weight of capital into the sector, both from local and global investors. And in the current low bond environment, the rates look pretty attractive on the spread. So where does it end? I think the question becomes, at what point do financing costs kick up rapidly, and that potentially moves
Makes
where
it
cap
harder.
rate goes. But look at where long bonds are. Yes, they've had some volatility over the last week, but
They're low.
take a view, they're low, and they're likely to stay low for a significant period of time. And then back to the point of where does the rental growth end? How do you bring supply into the market? So you can bring supply into the market in the outer areas, but I guess what we've just spoken about is maybe in those outer areas where you can bring supply to market might not be where people want to occupy.
Yeah.
So in the inner areas, it's a bit like buying a house in an expensive suburb. You're not going to build another suburb that's got the same characteristics, so the same atmosphere is playing into the industrial market at the moment.
Okay. So you're at least thinking 2023.
I think, and if you look at the infrastructure peaks, that's looking like where the bulk of infrastructure is coming into the market.
Okay. And so what products does Centuria have for people to cash in on this, I hope, correct forecast on industrial property?
So look, we operate Australia's only and largest pure play industrial REIT. So that's Centuria Industrial REIT. Trades on the ASX under the ticker CIP. It owns a portfolio of 46 warehouse assets around Australia, with a portfolio value of about $1.3 billion. And it's occupied, effectively we take a pure play approach. We're not developers. We look to own real estate in good locations with good tenants that effectively pay us rent, and we pay that through to our unit holders in turn with distributions.
Yep.
So the tenants in that portfolio are groups like Woolworths, Visy, Toll, DHL, Australia Post, etc.
So to sum it up then, and add more to my summary if I miss something out, but if you add the e-commerce demands forecast or future, which is quite small at this stage in terms of like, we know Amazon hasn't really increased its footprint, hasn't scratched the surface. And we add that to the infrastructure, it equals a very good outlook for industrial property. Is that a summary?
That's our view, Peter. Yes.
Okay. Ross Lees, thanks for joining us.
Thanks, Peter.